to take a look at the market today for the first trading day of March 2025. And it was a decidedly red day overall. And it was really because of the tariffs that are expected to be implemented by President Trump on both Mexico and Canada. And it looks like the China tariffs are going up to 20% from 10%. And so obviously this is throwing another batch of uncertainty into markets. And it was decidedly risk off when you had the Mag 7 really took it on the chin. Nvidia down nearly 9%, 8.7% there. Amazon negative 3.4. You also had Google down 2, Microsoft down 2. Apple once again continues to be the best of the bunch of the Mag 7. That was only down about 1.5% on the day. And so that was the color of markets. That's really what dragged down markets overall. Foreign markets were up. And so you continue to see money bleeding out of the US markets. You are getting strength in healthcare as well as consumer staples, per usual, utilities. On top of that, communication services, T-Mobile, Verizon, et cetera. Those are names that continue to do fairly well. But, Tesla down another 3% on the day. Even, Walmart down 1%. Even some of the banks are struggling, especially the larger banks. JP Morgan down 1.5%. Wells Fargo about the same. American Express down nearly 2%. So across the board, you are getting a big unwind of some very concentrated bets in markets. And that would not shock me to see this continue at least until, mid to late March. And we just started the month of March. So I don't think this is going to really let up in the short term unless there's some sort of reversal of this policy. And, Trump is, one day he thinks one thing and the next day he could think another. So he's very unpredictable in that way. And so anything is possible. But understand that we are in a market structure situation where there's some unwinds happening, especially of these big trades. And that's why the Mag 7 continues to disappoint. You had the dollar index that was down nearly 1%. Treasuries were stronger. So you did have rates drop. That should ease some pressure on the housing market, mortgage rates coming down. We're at 7% mortgages, then we're at 6 3/4. This might push us closer to 6.5 relatively soon on the 30 years. So we'll see what that looks like. You had crude oil down 2%, and that's after OPEC announced it will move forward plans with output hikes in April. Okay, and so that really put pressure on oil to the downside. So this is a risk-off scenario that does not look like it's changing once again in the short term. Now, I do expect market volatility in both directions this year, big rallies as well as these sell-offs. And this is the first sell-off of really in earnest of the year. And this is something where you should be rebalancing your portfolio. There's so many trades that were just offsides from a valuation standpoint and a market structure standpoint. And a lot of that is unwinding. And so, this is where we're at in markets. This is where we are with the Trump presidency. For better or for worse, however you feel about it, it doesn't matter. That's how the market is reacting. They do not like this, and it's causing volatility in the short term. I don't see any changes coming ahead.